Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. It's to feel the adrenaline running. A privilege just available for a few. Like all the things we do that excite us. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, ladies and gentlemen, 1212. Leave a comment in the chat if you can hear me. Thank you so much. And let me invite my comrades into this beautiful Zoom. How are you doing today? Are you bullish or bearish on gold?
Boss, what's up?
Luis.
How you doing?
Good, thank you. How you doing?
Pretty nice.
A second
nice
entry is
buy.
going well as well.
I did an entry, by the way. I still have the entries from the morning.
I'm holding as well. But data is going up slowly.
We don't have much today, even though they keep the same narrative. But
Yeah.
building pyramids could have some impact.
Building pyramids.
It's not. Building pyramids, yeah.
It is. It is going up the stairs. I think the narrative today around, the rebounds of China, the allowance of gold trading in the second, or if not the largest gold market in the whole world, just before the wedding season, is opening up the trading of physical gold again. It's definitely boosting demand. This is one factor which helped to lift gold prices. But also we have the FOMC interest rate decision tomorrow. And if you look at the Fed Watch tool, 99% of traders, yesterday it was 99%, 99% of traders expecting no change in the interest rate decision of the Federal Reserve, which means this could be the ceiling of one of the most aggressive monetary policy tightening in history of the Fed. The Fed is only 109 years old, the Federal Reserve I'm talking about in the US. And there was never ever such a steep interest rate increase in history, such as the one we just experienced. So it's truly a wonderful time to live in and experience all of this. If you're a finance and economics nerd, such as me, it is a fascinating time to live. So if you look at the interest rate of the Fed, this was one of the tightest ever. Goes back to 1983. Look at this. Look how steep it is. There were some, of course, in before 2008 financial crisis, and back in the 80s, Doesn't go back any. Oh yeah, it does go back to 82, but actually there was quite high interest rate as well. It isn't the highest interest rate that we experienced, but is the steepest increase. So they went to from 0 all the way to 550. And according to the survey of economists and analysts and general traders at the desk, the probability of the Fed raising interest rate tomorrow is going to be not raising interest rate is 99%. Only 1% thinks they're going to raise. But not saying they're going to pause, because their job is to control the market by actions and by words. But most likely it's off the table. Now, even if they raise, that would be a surprise to the markets now. Would be. But anyway, long story short, what I'm trying to say is that because traders are expecting that the Fed is going to stop with or pause with the rate hikes again, the multiple times over the 16-month, there is still room to the upside. The benchmark rate is higher than 5.25, the current one, or 5.50. They left the door open for another rate hike, but most of the traders expecting no hike tomorrow. And if they don't hike, maybe that could be the end of the most aggressive monetary tightening cycle. One of the reasons for this is because the economy started to show some cracks. AQX says, bro, tell simply where to sell and where to buy, no stories. Go and find another channel, brother. If you're not in a position, as we are already, and if you don't want to learn, if you're looking for signals, you can go to somewhere else. Many of the people, they're interested on how the market is moved, because, probably the people you learn from are explaining with some fancy methods, but anyway, you're out. So long story short, because many people expecting, or the market is expecting the Fed to pause with the rate hikes, it allowed gold to increase, the price to increase. Hold on. Igen, tessék. Jó napot, Horátnás. Holnap pont megyek be Pécsre szerintem. Jó. Délelőtt folyamán, tehát ilyen 9 és dél között. E-mailbe tudná esetleg, Petra, megkérem. Jó, köszönöm, viszont. Alright, sorry guys. So, I was talking about the reasons why gold was increasing. Can you still hear me?
Yeah.
Yes, Thomas.
Yes, Thomas. All right.
Yeah.
So there are many reasons why gold prices were increasing. The Fed is one, Chinese market is a second one, and pretty much these are the two biggest movers. We're going to talk about when the reversal is coming. It isn't going to come now. There will be some inflation coming to the market back because of the high oil prices, but it's not today. So currently I don't see any reasons why gold would reverse now, but we have to be very careful and read as much as you can, guys, because any news negatively affecting gold, high inflation, etc., high oil prices, they can slap down the price of gold. But for now, there's nothing in the way of gold. There could be a reversal coming before the New York session, because this is quite a pump since this morning, and we never know, what's going to happen. But right now, I'm sitting in two positions. One of them, 3 positions sent out today. First one was a stop loss hit. Second one is running in over 60 pips. The third one is running in 13 pips. It's okay, not bad for Tuesday, considering that tomorrow we are going to have FOMC interest rate decision. But that's tomorrow. How about we have a look on today's economic calendar and make some money. Today we don't have many news, guys. It isn't the sexiest. All we're left with is building permits and housing starts. It's boring as hell. Before we move and discuss it, let me just have a look on the CPI on the Eurozone. That was quite boring, isn't it? Just decreasing. Ah, that was not much. Anyway, CPI for the Eurozone is cumulative for 20-something countries, so it didn't really move the markets, is it? Now, in 12 minutes, we have building permits, guys. So how about we do a full analysis from scratch, and I'm trying to help you to learn how to do macroeconomic analysis. Who wants to help me to put together a full scenario analysis in 12 minutes?
Let's go.
One person. What a motivated bunch. Jesus freaking Christ.
They don't want to make money.
Somebody wanted to see my US 30 chart? Here it is, sir. Car culture. That's my US 30 chart. Okay. For you guys, especially on YouTube, because many people are asking how to do fundamental and macroeconomic analysis, I'm going to explain and show you how I do macro analysis. Okay. Yeah, some activities going on. I'm going to ask Luis, my comrade, to help me. So let's begin.
Why you sold US 30 now?
Why am I selling US 30?
Yeah.
Morning, guys.
Morning. One is oil prices hitting 100 soon. Two is you look at the Nikkei index that closed in negative. The Hang Seng was pretty much virtually zero movement last night, and I think there's going to be spillover to the US market. I could be wrong. My speculation is the US 30 is going to go down. Now, moving back into gold. Okay, so let me just close the music so you can hear me. The first thing you want to do is always look at your economic calendar. Today, I'm going to speed up things because we have 10 minutes. Today, the economic calendar is pretty much dry. I'm ignoring Canada because I'm not interested in Canada. Nice people, but zero market movement. Building permits and housing starts from the US. Can we use this to trade? Can we use this data to trade?
Yeah, it will have an impact on the market.
Okay, what is it represents? The building permits and the housing starts. Tell me more about it.
Wait for West Coast.
They demand that in the housing market.
The first, is it really the housing market or something else? How? Okay, before you buy a house, that house needs to be built.
Needs to be financed too, and if the labor market's weakening, then there's less home or there's less labor for homes.
Financing, yes,
but also
yes.
Interest rates are higher, so people are less likely to build or to take out financing to build.
Mm-hmm.
So that would indicate that there's less people buying homes, which indicates a less, I guess you could say the economy's not necessarily thriving if people are not spending their money.
That's one. Hello, Anthony. Welcome back. Yes, but a house. Focus on the name. Building permits, housing starts. What does it imply to you? Is it like ready-made houses? Like
you need
to build them. Okay, who builds the houses? Builders.
So you need the permits to
Workers.
allow you to build. And if
Exactly.
you are allowed to build, and when you are going to plan to start building, you need workers. That means
Exactly.
you're going to employ people and you're going to pay or spend a bit of money building. But the start is with a permit.
Exactly. Construction in every single economy, one of the most important sectors even more important than IT. I would risk this statement. It's important because you might remember that the government has always gives some benefits and projects to buildings. They build roads, they build hospitals, they build, big buildings that did not necessarily need, roadways, etc. Because if construction stops, the whole economy is going to fall in its knees. Therefore, construction is very, very important. Now, in order for construction to survive, they need clients, they need projects, they need buildings to build. And we all know that the government projects pretty much froze since we had the inflation. There was always cuts, and all the projects started. But on the other side, in the private sector, the building starts are important. So from this perspective, we can start understanding the dynamics of the economy, and we can start trading gold with this data. Now, we have 7 minutes, so I'm going to skip to the important part. We have building permits and building starts. One of them is just a, one of them is not starting. The housing starts is when the actual project starts. The other one is just a intention to start the project. Now, approval. Hi, Freddie. Thank you so much. Yeah, absolutely. So, but it can tell us about the health of the economy, the health of demand for construction to build houses. If people have money and if people have demand, then the building permits and the housing starts should increase. Now, if it's increasing, that means there's still money lying around in the economy. That's inflationary. If it's inflationary, the Fed is also watching the data, and if it's inflationary, probably it's going to bring some inflation back to the market. So in this case, now we can start building up the scenario analysis with this beautiful, wonderful, colorful brackets. So if we have inflationary data, which means that people still have the necessary money to spend, that means if it's inflationary, then the economy is still overheating, because there shouldn't be much more juice in the economy, yet there still is. So let me just clean up the chart a little bit. If we have inflationary data today, then gold is going to go down. If we have significantly higher data than the forecast, and I think 1930 is a very reasonable target. And that is if we have high housing data. And that's the opposite for if we have low numbers in housing starts. That means there is no demand in the economy, no money is lying around, and there are issues with construction, and it's signals a cooling and contracting economy because it's deflationary. Now in this case, it's good news for gold because the Fed is most likely don't have to raise interest rate that much. We might have a pullback, but if the data is significantly lower, that means gold is going to pull back and shoot up to 1941. And pretty much that's the essence, guys, of any fundamental and macro analysis. Now, I would not enter into any trade now because it's we don't know what the data is going to be, and building permits and housing starts isn't the sexiest type of data that can really move the market unless we have some significantly important or significant deviation from the forecast and from the mean. And right now it looks like we're going to have low housing data, so I would favor the scenario A, this one right there. What do you think? Is it a good time to enter, maybe front run the market? Do you expect the housing data to be very strong? Actually, even the forecast.
No.
So how about
because tomorrow's FOMC and there's a potential rate decision? I think I don't know. I feel like it's not going to do what we expect it to.
But when the cat is away, the mouse will play. And the bulls on the market definitely using this opportunity because the Fed is in a blackout period. Now, unless we have some really significant data, the gold market is going to continue to move up. So this is not financial advice. This is my speculation based on the forecast of housing starts and the building permits, which shows a deflationary forecast. And that should help gold to edge a little bit higher. I don't think it's going to go to crazy like 2,000 and 3,000 like some people say, but still enough to catch some reasonable, pips, maybe to 1941. I think that's reasonable expectation. But we have 2 minutes, so let's put some. Hello. You ordering pizza, TD Maheshwaran? Order some food for me as well. All right. 2 minutes, guys. What are you expecting? Is it going to be lower or higher housing data?
Possibly lower.
Lower.
I think it's going to be lower than you expect.
Yeah, I don't think there's going to be much more action, but who knows? Summer season is famous for housing starts, so all the buildings are started. Maybe spring, that would be more reasonable.
Yeah, nobody start a house these days after summer.
But now the interest rate actually hasn't started to come down. Exciting to see. I haven't traded many housing starts and building permits, but the speculation is the same. The same kind of thought process goes in most of the economic data. So you can apply the same concept. The same logic and thought process I just went through.
Thomas, just one thing on the housing permit, and is my understanding is currently that the market is mostly driven by actually the high interest rates because current homeowners doesn't want to sell their homes because they're locked into a low interest rate in the US because their mortgages there is like fixed when you sign up your mortgage. So it doesn't fluctuate with the current interest rate. So they don't want to sell. So that's basically what's driving the building market at the moment is the high interest rates. That's what my understanding is.
If the data, if it depends whether they have a variable or fixed mortgage rate, because some people need to remortgage every 2 to 3 years or 5 years.
Yeah, but in America, the market basically is that you get your rate when you sign up.
Oh.
So when you
They
buy a house.
Data's released.
Look
Way
at how
higher than
inflationary. Look at how
Wow.
inflation. But the housing starts. Okay, that's the building permit. The housing starts is actually much lower. So it shows that there is a willingness to build, but there's no money in the market because the amount of houses, the housing starts are much lower than the forecast. But the building permits are actually quite high. But the building permits month to month is quite increasing.
They need to do the houses. They permit to do the houses without persons and industries and
Yeah,
materials.
this is quite thingy. Let's have a look in the CPI. Oh, inflation in Canada. Common CPI, core CPI. There's still inflation. There is demand to build houses, but there is no money to build the houses because the houses hasn't started yet. It's a tough one. We have I need to think about this because this isn't easy. So we have, on one hand, we have inflationary data, 2 inflationary data with the Canadian CPI. If we factor in, we cannot ignore it came at the same time. But actually in the housing starts, that shows a different picture. Let's have a look on the open position.
we'll probably sell off gold for now, but keep it the same narrative and going bullish long time.
I think it sells off for pre-New York, and then
Yeah.
during New York we might get some more liquidity to move to the upside, but probably just getting a lot of profit taking. And by then the market will probably digest. So I think it will go up. I think it's just short-term bias that's gonna go down.
Sell the news and buy the fact.
Yeah.
Yeah, I'm
They're,
gonna
like,
keep the
investing
position.
on building permits and having no money. They have no profit on this news.
So won't Canadian CPI affect the price of gold though? Because it affects the US. I mean, there's got to be some correlation with how the Canadian CPI affects the US economy, correct or no?
It's well, focus on the inflation side. So it does affect. I mean, think about not Canada, but Central Bank of Canada, and if they struggling with inflation or inflation increased, we can expect in other developed countries as well inflation to increase. Winter season is coming up, oil prices, there's many other factors which could contribute to elevated prices, and if one of the developed economies having issues with inflation, there could be others as well. So I think that the building permits are showing definitely willingness to build, but no money to build. Inflation is still coming back, but there will be interest rate decision later this week, not today. And for this reason, I'm holding my bullish position on gold. But take profit maybe at 1937, 38, 41. Anywhere you happy. Gully FX, bro, why you got to talk at 13:29? Because I'm not in a rush, buddy. Most of the people are, shaking. Oh, we need to make money. Buy or sell, TP, stop loss, so salat, sir. You need to calm down, boys. There should be enough time to discuss anything that moves the market. You shouldn't rush into any financial decisions. That's the reason why I'm still talking 1 minute before the data release.
Thomas, do you think that they pause rates on Wednesday?
The Fed?
Or, yeah.
Most likely, yes.
Okay. So there's like some, I think I read it was like a 90% chance, but
99.
still 99. There's
If
90 when I
you
looked at it.
look at the Fed Watch tool, 99% of traders expect no change or pause in the interest rate.
But the inflation is gonna keep the same or worse.
We will find out, because the Wednesday event isn't the focus isn't on the interest rate increase, because that's just a number and everyone pretty much expecting that there will be a pause. What interesting is the FOMC economic projection. This is one, the statement, and of course the press conference. But we're going to have 30 minutes to read the projections and the statement, and pretty much Jay Powell is going to answer everything from these two documents. Rookie and beginner traders only focusing on interest rate decision because they only understand the numbers, but the actual real professional traders focusing on the narrative that goes behind the number, because that depicts the picture about the future. So let's have a look on the live position. So the first entry that we had this morning is going up very nicely. Oh, actually US 30 looks like, okay, so that's the other position, guys. I forgot to tell people on YouTube that I think it's still fine to enter on US 30, even though it's not financial offering or anything, but I entered into a sell position that's running in 14 pips profit, and I think US 30 has more downside potential than upside.
Thomas, I like your new tunes.
Thanks, just random playlist. I'm moving the stop loss for about 16 pips on the second entry. And moving up the bottom one. What positions do you guys have open?
Closed mine. I don't like that the data's mixed, so I don't really know the direction the market will go. But I also got in later than you did, so I wasn't holding on to much.
Now, the person who commented that why am I talking, a minute before the data release, the reason why it's important to talk a lot, because this way of thinking allows me to understand the data. I mean, I know many people that understand what the heck is going on with all of these numbers, but the thing is that the way to trade, the way how financial markets work, and the way how trading desks working is they trade on financial news and financial data, and we need to understand it, as simple as that. It's not trend lines and fancy terminology that drives the markets, it's the actual data. And if you don't understand the data and the logic behind it, then you're gonna get screwed in the market every single day. That's why it's important.
Habibi.
I'm reading now that's a lot of lower labor on construction in America. There's no professionals on construction anymore.
I don't think there's
Interesting.
yeah, it's Hungary has the same issue. All the good ones left to Germany or UK or somewhere else, and now we're left with the cowboys.
I think there's like some statistic for every like 5 people that retire from the construction industry.
And that's the other one, yeah.
Only
Aging.
one comes in. Yeah, the aging and retires also. Yeah.
All right. It's going okay so far. US 30 as well. That's going better than gold.
Hey, that's a classic music from you.
It's gonna be a boring day, guys. The FOMC meeting tomorrow is taking its toll on the market. Isn't much movement so far. But those who would like to join the Alpha community, look right to the chat. Use that link. It's a coupon code, discount code, to get some juicy discount. And become one of the Alpha members.
I have to go. Thank you, Thomas. Have a good day.
No, see you, Anthony.
Yeah.
Fuck, I'm catching knives.
Oh, gold just pulled back. I only entered with, I think, was it one lot? Yeah, one lot, so it's nothing crazy. That's running in, Jesus fucking hell, 50 pounds loss. Oh my god. I'm gonna lose everything.
US 30 pay the bills. Look at that.
Fucking hell, 40 quid, 50 quid down. Jesus. Some serious money going on. Looks like that's going into the bin. Second gold entry. Yeah. What are the chances it's going to reverse? The US 30 is going to drop. Looks like, isn't it?
That US 30 was an amazing entry.
Did you enter?
Yes, all thanks to you.
Good money?
Decent money.
Nice one. Yeah, it's running in 50 pips. US 30. Gold is being a little cunt, as usual.
But the data came inflationary. Wouldn't you want to close your position there?
That's arguably... it's mixed data, so depending on your interpretation on how you look at things. Half mixed, it's more inflationary, but the thing is, the FOMC meeting is tomorrow, and most likely they have the interest rate decision already, and the narrative is going to move the market tomorrow, but not today. And it's a reverse thinking and how the market works sometimes. How many times you see it's clearly inflationary, market should drop, etc., but it goes the opposite direction. That's exactly because it's the reverse psychology. When the cat is away, the mouse will play. And the perfect example today is this nice 80 pip gold rally, which many people wasn't expecting, but usually before interest rate decision, the market front runs or goes the opposite direction, depending on the scenario.
Yeah, no. You never know. New York session, it might just go up.
Yeah, that's the other thing, is it can always pull down trousers or change lives. The famous New York session. Oh, gold.
Finish him.
Aye.
Good evening, Thomas.
Hello, Maheshwaran.
Yeah, Thomas, I have one clarification. In case tomorrow the Fed will neutral the interest rate, that means they not rise or the in the interest rate. What do you expect the price will go to in short-term bullish in gold? Maybe you have any expectation the price will be go in bullish segment for what is the level you have any?
If they don't raise interest rate, what is the level that the gold might go?
Yeah, in a bullish, short-term bullish.
But it's difficult to tell because I need to see the statement and the economic projections. So it's not the interest rate. It's the narrative that comes with it.
Okay.
So if you look at the TD, how long have you been a member?
Exactly 1 month, 1.5 months.
All right. Did you trade? You haven't traded the press conference with me before.
Yeah, no, I'm not trading.
All right. So how it works is that tomorrow we are going to have multiple things. We're going to have interest rate decision. We're going to have economic projection, which is the summary of economic projection, SOP. Otherwise, other name. There's going to be FOMC economic projection, statement, rate decision, and FOMC press conference. Now, all the rookie traders are just focusing on the number, but that's not what we're here for. I'm an economist, so I'm going to guide you through. We're going to read the statement and some of the economic projections, and then we're going to have a good idea what Jay Powell is going to say in the press conference. This is what everyone's waiting for. How will Jay Powell communicate? Will he be a hawk or a dove? Is the that's always the question.
Okay. We have a live session on tomorrow for this thing.
Do you want one?
Yes, of course. Not only me, all of the members expecting the live. Tell me, guys.
There's only one person who showed up or showed interest, so.
No, I'm always here,
Guys.
bro. Come on.
I think all
Two
are
people now.
He's the speaker.
Me
for the
too.
people.
Guys,
Same here.
come on.
Many
Yeah,
more
we
people.
can live trade.
Yes.
For me, it's just for watching. I can trade news. It's not allowed on PropFam.
You're doing a challenge, or is it like a funded account?
It's real, but they don't allow trading news. You have to wait 5 minutes. 3 minutes, but I prefer 5 minutes after or before. Actually, it's a pain in the ass.
It is frustrating, isn't it?
My bad, I don't read the conditions in terms.
Is it FTMO or?
on the trader. Is that for?
Hello?
It's the 400k I told you before.
Ah,
Of,
yes,
the
yes,
funded
yes.
trader, the real one.
Yeah.
Maybe next time I have to choose better because this is don't allow those even magic keys.
Do not allow, they don't have magic keys?
No, it's not allowed to EA, so magic keys is AA. Yeah, sucks.
Look at US 30, just not stopping. It's dropping like a wild diarrhea. Okay, gold started to move a little higher.
Gold is making technicals. It retests on the highest from yesterday after US Open, after 1 o'clock, 8 a.m. New York.
So sounds like you put a lot of effort into the analysis of you know, the timing and the price behavior. Is that your strategy?
Yeah.
Like before market open, all that.
Most of the time I see based on UK, imagine it's the same time for me. Most of the time when the price of gold is 8 a.m. UK, it's probably gonna be the same US, 1 o'clock, 8 a.m. New York. Probably it moved $5-6 between that time, but most of the times keep the same price, like a line there, like a support there. And after that, probably we'll have major news and we'll make the direction. I always follow 8 a.m. New York and Europe.
Yeah, observations can often pay some very good money when the market shows the same kind of price behavior pre or post or at market open or whenever the timing, because there are things which many of you have no idea. But it's quite simple actually. When you go to a bank and you see the big board, when you want to exchange your currency into, let's say you're going into Spain, you want to exchange some zloty or dollar or pound to euro because you're going to Magaluf or Marbella. So you walk into the bank, you see the big board, we buy and we sell dollar or euros changing into dollars. Now that board, right? It's not real time. There has to be a fixing, and it's the official terminology is fixing. The banks are fixing the exchange rate twice a day. Some banks 3 times a day, but it's very rare. So it's twice a day at around 8 or 9 o'clock in the morning, European time, and at 4 o'clock in the afternoon, 3 or 4 o'clock UK time. And that's how the market works, fixing the rate. And going back to Luis's answer, so yeah, observations can pick up these regularities that happen every single day. The same as you have a fixed time, which is the New York Stock Exchange Open, or the London Open, or you have the Asian Close, etc. All of these every single day at the same time. And sometimes I noticed many years ago, and sometimes still do, that sometimes you have those 20-30 pip jumps at the market open into one specific direction for weeks. I remember 3 years ago we made quite a good amount of money for 2 months. It was going on for 2 months. There was always a spike at London Open, 20-30 pips, but then it was always a drop. So we just aimed every single day for the 20 pips for 2 months. It was the best trading 2 months ever, like guaranteed 20 pips every single day. Of course, then it started to break down and it didn't really work after, but we pulled out in time. So keep up with the observations. I think it's a very good way to make money if you can identify.
Because most of the times we see, hey, it's gonna be market open in 9:30, but the big market is 8 a.m. All the industries begun to work, all the money start running. I don't know, my view. Of course, stock market have a huge impact, but the world have more impact too.
Yeah, but it's not just there are exchanges which don't run 24/7. A commodities exchange do run, futures market do run, but some of the exchanges where the products that go through the centralized exchange, for example, ETFs, stocks, and some others.
But that's big industries, much bigger.
Yeah. And it can affect the price of everything you trade or I trade.
I mean, like, in a way, like, imagine building pyramids. There's a lot of building pyramids, but not housing starts. There's a lack of labor in the construction workers.
It could be a explanation, or
there's
no money to start. There's willingness to build, but there's no money and no people to build.
You never saw like a construction company in a big stock market, I guess.
There are some big companies, public.
But it's not like tech. It's not like mining.
Not that big, but there are some very big companies in US 30 as well, construction companies.
Good to know. I will see it.
Mohammed Omar is asking Thomas, do you think long gold to 2,100? Not today. Not today, brother.
Do you think US 30 will break its support today?
Why don't you ask me, guys? Do you think it's gonna rain today or something? I have no idea. Is it gonna break the support? Probably. We will see at the market open. Most likely, I entered into a position of sell because.
Morning. All right. How are you, everybody? Good. Good. Fine.
Someone is cheating on me. So I think the reason why I entered into a sell position yesterday because yes, I do believe it's going to break the support. And we have a new 4-hour candle, ladies and gentlemen. Buckle up. We're going to have a. Are we going to have a candle fill? A wick fill? Let's find out. Actually, no, I'm gonna place that one here. Yeah. That gives
the latest one close bullish. Let's see. After retesting all that lowers.
No, still running in profit.
There's no news, so I take the 2 calls.
Habibi.
Yes, Habibi.
Tom, what do you think? Are we gonna fly or respect and we drop? Who knows? But I'm just Simple human being, how can I know? Anything is possible. I think it's going to refill that wick, but 1940, 1941, if we're lucky enough, the price is going to go up. I don't see any reasons why it would drop. Only the data today, but interest rate decisions tomorrow. I would, if personally, most likely I'm going to close 90% of the profit if it fills the wick. If it continues to move sideways, I'm just going to pull out of the positions. Simple as that. It doesn't work. If the market wants to move, it will move. Question is, do I want to stuck in a consolidation? Absolutely not. On US 30, I think it's going to drop. The most important is stick to your analysis. Always think it through before you enter into a position. Use technicals, use fundamentals. I don't care what you use, but think about it and think about everything and think about things that you wouldn't think normally. Think with the head of the Fed. That's probably one of the best advice I can give you. Think with the start learning about market sentiment. It's one of the biggest market movers. So even though how many times you saw the data, it was a clear-cut buy, but actually the market went the opposite way. That's because of the market sentiment. Once you understand the market sentiment, you have about 80% higher chance than any other trader in the market or other traders in the market to make consistent profits. You're still going to lose sometimes, but you're going to have 80% better chances than other retail traders out there. Even professionals, they get it wrong. So, but they follow market sentiment as well. Oh, lovely jubbly.
Move the TP on gold.
No, it's gonna be enough.
A 1 hour time frame, okay.
Did my camera just turn off?
Yes.
Oh,
Miss you already.
Aye, papi.
Jesus, no. Come on. You're my boss. It's weird.
I think I have a low battery and it's turned off. Okay guys, I'm gonna call it a day. We passed the highlight of the day, which was the data. New York Open is coming up. I'm gonna leave some positions open. I explained everything why I expect the market to move the way it might move. Tomorrow is going to be FOMC interest rate decision with press conference by Jay Powell to the people. We're going to have interest rate decision statement. Whew, so busy day. No morning briefing tomorrow, but we're going to live trade the event. So thank you so much, guys. Make the money, take the money, and see you tomorrow. Members only, no live session. Members only, no live stream, just for members. See you guys.
Let's go. Have a nice day, boss.
Bye bye, Thomas. Take care.
Bye bye, Thomas. Thank you.
Bye bye.
Take care, Thomas.
And those people who would like to join the Alpha community, you can go to alphafx.eu. I'm sending the link into the YouTube chat, or you can find it below the video, below the live session. I do morning briefings every day. I explain market moving fundamentals and macroeconomics and actually live trade with people. It's not just pre-recorded crap. I will stay with everyone who signs up. But long story short, link is right to the chat. There will be no live session for the FOMC press conference. It's only for members, guys. If you want to join, use the link, use the discount. It's all yours. Thank you so much. And this is the Alpha FX